And I am just so delighted and thankful that you all came this morning. We're very excited to have Fannie Mae here back in Reno for an encore presentation of Fannie Mae Speaks to Reno in order to speak with our members, answer questions, and give us an overview of some of the programs that they have for us. But before I start, I'd like to introduce some of our leaders who are here in the room today. The trustees of the Northern Nevada Regional MLS. And so let me start with Nancy Fennell. She's one of our trustees. Please stand. Yay, thank you. Mike Nolan is in the room. I understand Carmen Kundert was going to be here. I don't know if I'm just too fast and she's not quite in the room yet. And Judy Plume from Sierra Nevada. I don't see them. But I would like to recognize also our 2009 and 2010 president, Sherry Cartinella, who is now your Reno Sparks Association of Realtors president. Thank you. These leaders, these are the people who saw the vision and started up with the partnership that we have with Fannie Mae. And so I want to just take a moment before I introduce our speaker of pride. I won't make you all sing Kumbaya or anything like that, but these leaders saw the value of this partnership. And I don't know if you know, but Northern Nevada was the first MLS in the nation to launch the Fannie Mae Short Sale Assistance Program. It's a pretty big deal. And our own Sean Murphy, who's sitting up here working our technology, he wrote the code that provides the solution for the online intake form, which we have now licensed to other MLSs across the nation. So, yeah, thank you. So we are by no means the largest MLS in the country, and but our leaders and our team and you all as members are leaders in the industry, in the whole arena for MLS. So I want you to take a moment to think and be proud of that. Your trustees are looking at programs and tools to lead to a successful transaction for all of our members. They are focused on keeping our members central to the real estate transaction, and it's these visionaries that you have put in positions of leadership of your organization that I just really want to call attention to. So I'm not going to make you hold hands and chant, like I said, but I do hope you'll take a moment to just think of and be proud of this organization that you belong to and that you have helped to create. So again, before I introduce our speaker, I wanted to put today's conversation about these listings and what Fannie Mae is doing and short sales in general into context. So this morning, so let me bore you with a few numbers, but I think it will help. This morning we have 5,688 active residential listings in the MLS. 64% of those have a special condition of sale. And of that 64%, 70% of the special conditions of sale are short sales. So that means a total of 45% of our entire inventory in residential active listings is a short sale property. So to take that further, 54% of that number, so again, I'm throwing a lot of numbers at you, but understand a big percentage of those are active pending short sale, meaning they already have, the buyer and the seller have come to terms, and now it has moved forward to the bank for negotiations. And we all know that's where the length is added to these transactions, I think. So as we go into this morning, we talk about a couple of programs. One of the ones that Ryan's going to focus on is the Short Sale Assistance Program that we have launched through Fannie Mae and we've had it since May. And we have 259 listings today that could qualify for that program. So I just wanted to frame the conversation that we'll be going into this morning so that you can see that in the context of our own listings, this is a beneficial program. Hopefully the servicers are doing great and you don't need it, but if they're not, you have a resource and some place to turn to. So at the end of the program, we will be taking questions from the audience. We'll be having Amy roaming with a microphone so we can be sure to answer all the questions. And now I would like to introduce our speaker. His name is Ryan Crowley, and he is a director at Fannie Mae, where he plays a central role in the Obama administration's Making Home Affordable program in managing Fannie Mae's single-family book of business. Crowley is principally focused on managing the relationships between the U.S. Department of Treasury and the Federal Housing Finance Agency, Fannie Mae's regulator. In this capacity, he advises senior leadership on housing policy issues and contributes to the design and implementation of the $75 billion Making Home Affordable program. He serves as a primary liaison to the National Economic Council for Fannie Mae on various neighborhood stabilization initiatives, and he is also responsible for Fannie Mae's foreclosure prevention activities for its single-family book of business. While at Fannie Mae, Crowley spent 2 years in the housing and community development, where he led all planning and forecasting for the multifamily division. Crowley also worked on Fannie Mae's restatement, contributing to the development and oversight of the Sarbanes-Oxley compliance program. Prior to joining Fannie Mae, he worked in management consulting and on the presidential campaign. He earned his Bachelor of Arts from Union College and Master of Business Administration from the University of Maryland. Please help me in welcoming Ryan Crowley to speak with us.
Thank you, Shelley, for that introduction. I think, at Fannie Mae, we hold Shelley in the highest regard in terms of the MLS CEOs. We are extremely grateful for her partnership in pioneering this effort for Fannie Mae and other MLSs across the country. So thank you very much for that. So how many folks here have heard of the Fannie Mae Short Sale Assistance Desk? That's tremendous. That's tremendous. One of the things I've been doing over the last couple of weeks is traveling around the country in the hardest hit markets. And every time I ask that question, you get maybe 3 or 4 or 5 hands. So that's much to Shelley's credit and everyone on her team for getting that word out. So thank you. How many folks here have done short sales recently or in the process of trying to complete a short sale? Okay. I might have to take all of you on the road with me. You can be my Verizon wireless network or Fannie Mae network. Okay. So today we're going to talk about the Fannie Mae short sales and how we are streamlining that process. And then I also want to give you some updates on the HAMP and HAFA developments with those programs. And then also talk a little bit about HomePath and how you can become part of or apply for our HomePath network. So hopefully by the end of this session, you'll be very familiar with the desk, the benefits it offers, and it sounds like from everyone here in the room that you already are either aware of the desk or its benefits. So the other things we want to talk about is how to actually submit a case to the assistance desk, and then, like I said, the updates on the latest programs and where we can go for more information there. So what I want to cover today, some of the things that we're seeing on the ground, or at least from Washington and Dallas, where we have a lot of our operations, and some of the opportunities we also see in the housing market to help increase short sale volume, not only here but across the country. We'll talk a little bit about the desk, benefits, some of the success stories, particularly some from folks here in Northern Nevada, and what they've been able to do by participating in the desk. And then, not to belabor this, but the HAMP, HAFA, and HomePath. So all of you should have received the Short Sale Assistance Desk, FAQs, the reference aids, and the questionnaires and borrower authorization form. And unlike other programs out there that require lots of documentation and a number of steps, you'll find that this is probably all you need to really get off the ground here if you haven't tried the desk already. And then you should have some Fannie Mae resources there I think that you'll find helpful, not just in the short sale space, but also for borrowers that are looking for options and just trying to get a better understanding of what's out there for them, given their situations, because everyone is in a different situation depending on where they live. So the challenges in today's market, we view it three ways here. First is the borrower. I think many of you know once a borrower has exhausted all modification options and is looking down the path of foreclosure, we want to pull them back. And so we want to, we're in the business here to keep borrowers in their homes. And when that's not possible, we want to offer them foreclosure alternatives. But with the borrower, anytime you're dealing with a short sale or a deed in lieu, there is that they unplug, they disengage from the process. And I've never sat across a table from a mother or father, or husband or wife, and told them that you're going to lose your home. And with that, you're also not going to be able to take any of the equity that you've saved a lifetime in that home. Many of you probably have. And I think once you have that conversation, they immediately withdraw. Emotionally, they're drained. Financially, they're completely spent. So they're not going to be a partner in many cases in the short sale process. So that's the borrower. The borrower is disengaged, and it makes, I think, all of your lives a lot more difficult in helping them get to that point. Value. Value we see as an issue at Fannie because when the market was rapidly expanding in 2002, 3, 4, 5, 6, before the crash, everything was great, and sales were getting done. Every couple of months you're seeing the same home flipped and flipped and flipped. And once that market started to decline, what we were finding is that we were ordering BPOs, and the BPOs were coming in. And when we compared it against our models, our own internal financial models, our valuations were coming in much higher. So we were saying, well, that can't be. We're not accepting this price because what we're seeing, at our desk from Washington, D.C., is something entirely different. And so we were turning down a lot of short sale offers, many more than we expected. And so that's the big issue right now for us is value, because what we're finding is we rely on county tax records, government, and other property transaction data. And when the market is in sort of a downfall, it's really hard. The settlement agent's not updating the information. The records aren't getting updated. We're relying on outdated information, and it's putting us behind the curve. So that's value, and that's the second issue. Process is the third one, and I think process, like the borrower, you can certainly relate to. Short sale process is extremely complex. You're dealing with multiple stakeholders. It's not just the borrower. It's not just the real estate professional. It's not just the servicer, but you're also contending with second liens and MIs and mortgage insurers and Fannie Mae for that matter. So there's multiple parties in the process. And when you may have an offer and you're talking with your servicer or your lender or the borrower's lender, you're dealing with lost documents, multiple points of contact. You're having to have the same conversation over and over again. And what that's doing is it's pushing the timeline further and further out. So that short sale is not taking a month. It's not taking 2 months. It's taking 4 to 6. And what we found is that it could take up to 2 years. I've seen short sale cases that have lasted longer than 2 years. So the process is the third issue, and it's one of the most complex issues that we're dealing with today at Fannie Mae. So what are we doing to solve the problem? Well, on the borrower's end, we launched Know Your Options. It's a website that we launched this in Q4 of 2010, and it's a website where borrowers can go to, and other folks for that matter can go to, and by answering a few questions, can look at different scenarios that they might be in. So if where they fell behind in their payments and they thought they were going to be foreclosed upon, they might be eligible for a modification or refinance or a short sale or a deed in lieu. So now it gives them more intelligence and arms them with the information that they need to be able to make good decisions. And the Know Your Options, I think, link is in your Fannie Mae resource materials. But that's a great tool for the borrower and for others looking for help. On the valuation end, we've improved our modeling considerably. So we're still ordering BPOs, and we're still relying on information that we've relied on before, but we have better data today to make better decisions, and it's resulting in more short sales. On the process end, which is where I want to spend most of the time today, is talking about the short sale assistance desk. What we found in launching the desk is that it provides another channel where once the process stalls and you can't go any further, the short sale assistance desk is a tool that's empowering people across the country where their MLSs are using the desk to close that deal sooner. They have a direct line to Fannie Mae, and what we're finding is the timelines are shrinking, the process is getting easier, and it's helping to stabilize the market in some places. Now it's not intended to circumvent the servicers who we pay to manage our loans, but it's a way to escalate those cases and get guarantee that they're going to close or we'll see resolution. So what is the desk? I just talked a little bit about it, but basically it comes down to it's a vehicle for realtors to get a direct line to Fannie Mae. We're not a retail operation. We are in the secondary mortgage market. This is something very unique to what we have traditionally done. But it's a direct line, and like I said before, we're able to, as an investor, resolve these cases that are being escalated where you may not be able to complete it with your servicer, with the bank. So what we found is that the timelines, like I said, are decreasing. We're seeing relatively less than 2 weeks to close a short sale. And it's addressing the servicer responsiveness. You're all supposed to be part of my network. We'll get there. But it's addressing the second liens and the mortgage insurer issues as well, which are very difficult in resolving. I served on a panel in California about 2 months ago, and on that panel was Bank of America, Wachovia, Wells, but it was Wachovia, and I'll get to that in a second, and Chase. And so I was talking about the short sale assistance desk. Bank of America says, well, we have our own desk, and we have our own desk, and we can do just the same thing that you're proposing here. And I said, but what happens when you have a second lien issue? What happens when you have a mortgage insurance issue? What happens if you've bumped up against your delegation of authority that we give to servicers? They said, well, we take it to Fannie Mae. And I said, well, I'm Fannie Mae, and we're the investor. We own that loan. So this is a way to triage those issues. Now, I'm not saying we have all the answers. I'm not saying we're going to solve every case in the way that it needs to be, the way that the borrower and the listing agent may think it needs to be solved, but it brings resolution to the matter, and I think that's something that's missing from today's short sales. The Wachovia guy, by the way, said, well, I got this all solved. And in Wachovia and Wells' defense, Wachovia has a lot of portfolio loans. They were a portfolio lender, and so they were able to work those issues in-house. So they weren't contending with second liens and mortgage insurance. So he was coming at it from the ivory tower, which we'd all love to be in that place. But it's beside the point. So here's the guidelines. In submitting a case, again, I go back to the servicer. We pay the servicer to carry this out for us. And you know, they are doing the best they can. I think there's definitely some capacity issues, there's some technology issues, and the service that's provided on the front end with originating loans is not always the service that's provided on the back end with servicing those loans. And we're taking steps to improve that. So this isn't intended to circumvent the servicers, but we give, I think, specific timelines here that really set expectations for many of you, and that's an initial response within 20 days. If you don't hear from the servicer within 20 days, escalate the case to the short sale assistance desk. If you don't get a property valuation in 30 days, escalate the case. And if you don't get a final decision 60 days from the original offer submission, escalate the case. And even if you have the approval, but there's second lien and MI issues, escalate the case to the short sale desk, and we'll work that for you. So these are the guidelines here, 20, 30, 60. And I think you should have that in one of your materials. So, going back to the resolution. Most cases get resolved in 2 weeks or less. Those cases are typically your plain, vanilla, first lien, no seconds, no MIs. We are seeing that in the number of cases that we've seen come through. Essentially 9 days or less, 9 calendar days or less, we're resolving that case. Issues with MIs or second liens typically take 2 to 4 weeks. It could take a little bit longer, but on average, 2 to 4 weeks. And we're not guaranteeing that the deal's going to close. What we're guaranteeing is that you're going to get a resolution. And that's something that's been missing. So the question often comes up, well, are you guaranteeing the short sale is going to close? No, not at all. What we're just saying is that you need closure. And your revenue models are driven off of timelines. And if it takes 6 months or a year or 2 years to close that short sale, that's money from you. And what this does is saying whether or not that offer is going to go through or whether we can or can't accept it. So what's the benefit? For Fannie Mae short sale properties, this isn't for Freddie Mac. It's not for the private label market or other bank portfolios. This is purely for Fannie Mae properties. It gives greater confidence to those in the industry. It increases revenue. You get a single point of contact. We have the desk. The desk resides in Dallas, Texas, where our servicing operation and REO centers are based. It gives you that single point of contact that you're not getting from other parties. The approval delays, that's key, I think. And the red tape of having to work the case with a number of parties is really challenging. So you're cutting through that. You're getting a representative from Fannie Mae to manage this case for you. How do you make money in this market where short sales are the real transaction or becoming more of the real estate transaction these days? You can differentiate yourself by going to the borrower, the prospective client, and telling them, hey, this is a Fannie Mae owned property. Your loan is owned by Fannie Mae, and because it's owned by Fannie Mae and because you're pursuing a short sale, all you have to do is sign the borrower authorization form that I have before you that you have in your packets and give me the authority to escalate this case should it get bogged down in other channels. And going back to the 20, 30, 60 submission criteria, the 20, 30 days, 60 days for submitting the case. So this we found, and this is what I've been telling folks, is that by having that initial conversation, getting that borrower authorization form signed, identifying that it's a Fannie Mae owned property, and I'll show you how to do that, you can easily make that pitch to the borrower, and they're going to be more engaged because they have confidence. Not only do you have confidence, but they have confidence, and they may not unplug from this transaction because of that. So we'll talk more about the Fannie Mae loan lookup. But I think those are the three things to keep in mind as you're talking with clients: is identify that it's a Fannie Mae property, bring the borrower authorization form with you, and then on the listings, maybe there's some buzzwords that you can put in there to denote especially now since word is getting out about the short sale assistance desk, that this would be eligible. So when showing the properties for the buying agents, it increases your ability to close. Going back to what we just talked about, it's using the loan lookup tool. Buyers we found are standoffish when it comes to short sales, because if they don't have the patience or they're in a situation where they need to find another home, they're not willing to go down that path. Now, it'd be great if they were living in a place and they wanted to buy a short sale and they could stay in that current home, or if they're renting for 9 months, a year, and they can wait it out. Those are the types of candidates you're seeing. But here, with the desk, if they know that that property is a Fannie Mae property, then you're going to see more take up there. Does anybody know Damian Jansen? Yeah. Is Damian here? Okay. Damian is one of our success stories. And I don't know if anyone in the back can see what's on the screen here, but Damian said, the assistance desk helped my seller and me get results even after we felt like we had hit a dead end with the lien holder. We were at the point where we could not even get through on the phone and were about to give up hope. After we engaged the assistance desk, a senior negotiator from the lien holder contacted me, falling all over herself to get the short sale seriously considered. That's Damian's account. Bob Sewell from Zephyr Cove, Nevada. Does anybody know Bob? Yeah. Is Bob here? Okay. I gotta throw that out there in case I get some questions from Bob. But he sent an email to our desk to the folks down in Dallas and said, I am absolutely convinced that without Fannie Mae's short sale assistance desk, the short sale property would have gone to foreclosure the next day. I want to thank Fannie Mae for their attention, professionalism, and follow-through. My buyers and their agent, my client, and I are very grateful for your help. So that's Bob. Marty Hunt, I mentioned that we had a short sale that lasted longer than 2 years. That was Marty Hunt's short sale. And Marty Hunt, who's down in Orlando, wrote to us, the assistance desk is amazing. I submitted a request Tuesday and had 2 calls from the lender the next day. I was in the field showing houses, but she called the second time because I had not called her back quickly. That's what I call responsive, and she couldn't have been more helpful. So Marty Hunt, when he was a skeptic at first, and we said, well, just give it a try. And Marty Hunt gave it a try, and that short sale lasted 2 years, was resolved in 48 hours. And Marty Hunt, I mean, this just goes to show you that the lender is more responsive because Fannie Mae owns that loan, and Fannie Mae's making that call directly to them. So that's another example there of how quickly these things can get resolved. And Michelle Herndon in Tampa, Florida, is another success story here. So I won't read Michelle's account, but you see that there's more of these stories out there. And what we're finding is that the word is getting out. So while Northern Nevada was the first to launch the desk, yesterday the California Association of Realtors announced their partnership with Fannie Mae. And there's more. I think we have 14 total desks that are live, several more in the pipeline, and we're getting calls every day from other parties that are interested in partnering with us on this desk. So these stories are just going to continue to come out. So how do you submit the case? It's actually rather simple. Have everyone here gone to the website? Okay. So the borrower authorization form is number 1. I mentioned that bringing that to the first conversation that you have with your clients or the borrowers, because once that's signed, that's often what causes most of the hang-up in getting these cases submitted and worked. So if you have the borrower authorization form and it's been signed and authorized by the seller, that's number 1. Number 2 is filling out the questionnaire, which is rather simple, and it just requires you to enter some information in there. We're not asking you for blood samples or anything like that. It's just information about yourself, about the property. And so attaching the borrower authorization form, completing the questionnaire are the two critical items for getting this getting the case escalated to Fannie Mae. So I talked about what are the components here. What's the criteria? Well, the first lien needs to be owned by Fannie Mae. Second, we're only taking post-offer issues here. So if the property's been listed but there's no offer, then that wouldn't be something that would fall into the eligibility criteria. It needs to be only post-offer issues. The third is that the servicer must be in receipt of the valid offer for the property. You must be an MLS subscriber, and you must be the listing agent for the property. Now I know what you're thinking. What about the buying agent? Because not every listing agent is a good agent. And hopefully you're both working both sides of the deal here, and I didn't offend anyone. But what we found is that not every listing agent is responsive. What I can tell you right now is escalations are only for the listing agent, but we are taking steps and we are taking this into consideration as we talk to more and more folks and get the same question. This is being considered, so I want you to be aware of that. So going back to the Fannie Mae loan lookup, how do you identify if it's a Fannie Mae owned property? I think the link is on the website. So by clicking on that link, it takes you right to Fannie Mae, and all you need to do is type in, with the borrower's authorization, type in their address, city, state, zip code, and if it's a condo, please put the unit number. So if you don't, then it will get rejected and it'll say that it's not a Fannie Mae owned property. But that's all the information you need, and then it just tells you right away whether it's owned by Fannie Mae or not. So that's it's pretty simple. I don't know how else to say it. Has anyone tried using the Fannie Mae? I assume you have, since you're all familiar with the desk. Okay. So if Fannie Mae owns the loan, borrower authorization must be signed, and you can download it from the MLS website. So I just encourage you to download it from the MLS website, print off however many copies you want to print off, and use that when you're going and talking with prospective clients. You can submit the BAF to the MLS or to Northern Nevada through fax or uploading it directly, depending on your capabilities there. And then just review the information and complete the intake form, the questionnaire, and you're off to the races. So there's the borrower authorization form. And the desk, again, is not intended to replace the normal approval channels. We're not saying that you should go around the servicer. You still have to go through the servicer or the lender to get these cases resolved. That's the first step. And that process, too, is getting better. So there's people out in the industry, much smarter than myself, that are thinking about this and about ways to streamline this process to help improve that experience for the borrower, for selling agents, for other people that are trying to do short sales. So that will get better. That experience will get better, but you still need to go through the lender. And again, we're not guaranteeing that this is going to be a positive outcome. I think I'm sort of an optimist. I think all outcomes are positive as long as you get the outcome. If you don't, that's where frustration sets in, and I get more questions. So, only post-offer issues. Work it through the servicer. You see that there's a reoccurring theme here? Okay. And then address all actionable requests. So if you work it through the servicer and the servicer is asking questions, You can't just shut down and say, I'm not going to address any of this. I'm just going to wait till my 20 days is up, and then I'm going to take it to Fannie Mae. And Fannie Mae will work it for me. You still need to be responsive to them, especially as they're trying to work the case. So once all this is done and the case is submitted via the online questionnaire and you've submitted the BAF, you'll get a response, an immediate response confirming that the short sale, thanking you for submitting the short sale. It says you should receive an initial response within 1 week confirming that your case has been reviewed to verify if it meets the submission requirements and will be further escalated. Please note it may take several weeks to complete the escalation process. However, if your case extends beyond 2 weeks, we will work to provide status updates as available. Neither your MLS nor Fannie Mae can guarantee a positive resolution to your short sale issue. In submitting your cases, have you found that you haven't gotten that email response? Okay. All right. Processing and the follow-up. So once the case is submitted to Fannie Mae, by the close of the second day after your question and BRF are received, the case will be submitted. So I think is it 48 hours? It's 48 hours, right? Most of the time it comes even sooner than that. All communications from Fannie Mae will be shared with you directly after the communication is received, and then a final response will take at least 2 weeks, may take longer if it's related to MI or second lien issues. And I think we haven't updated this slide, but I can tell you that the timelines have shrunk. We've started to see less than 2 weeks. I said 9 days before, so as word is getting out, things are getting easier. Response timeline. Verify the form is complete. The BAF is received. We've talked about this. If the BAF is not received within 24 hours of submission via online questionnaire, your MLS will send one reminder email. Thank you for submitting your short sale issue. Unfortunately, we have not received a signed copy of the corresponding borrower authorization form. Your case cannot be escalated to Fannie Mae without borrower authorization. You can download a copy of the form here at the website, and please return it in order to further escalation of your case. This is the biggest hang-up for applicants is not having this. So please make that your first priority. And then if the BAF is not received in that time frame or the questionnaire is not complete, then you'll get a response just saying, please resubmit your case. Only the questionnaire and the BAF can be accepted by the MLS. So for privacy issues, we can't accept any other documentation that would have social security numbers or other information that could lead to privacy issues. So it's just 2 documents, makes it very, very easy. And then we'll contact Fannie Mae, someone at the short sale assistance desk will contact you directly if there's other information that they have that they need to resolve. So just keep in mind that while communication is getting passed through your MLS, it could also come directly from Fannie Mae if we need more information. I think we've touched on this, just the timeline. And how 4 weeks or longer is typically what we've seen with the MIs and the second liens. I will say that of the cases that have come through the desk, not just here but across the country, we've resolved close to 98% of those cases. So that means that 2% are out there, and those 2% are probably the cases that have just come through in the last week or two that haven't been resolved. But the success rate is phenomenal. And the question I always get is, well, is Freddie participating? Are others participating in this? So Freddie's not currently participating in it, though I suspect they'll want to when they hear hear how much take-up Fannie Mae is getting from their desk. Does everyone know Amy? I probably should have told Amy she was going to be up here before I put her up here, so apologize for that, Amy. But Amy Rawls is the project coordinator, and if you have any questions, not to flutter lines, but here's her information. Does everyone have her information? Should I read it off so you can take it down? Okay. So Amy is our Northern Nevada face of the short sale assistance desk. So this is going to be hard to read for folks, and I apologize for that. This just highlights the number of changes that have taken place with respect to HAMP. So taking off our short sale assistance desk hat for a moment and talking about HAMP, the Home Affordable Modification Program. Is everyone here familiar with the Home Affordable Modification Program? Okay. I hear chuckles. That doesn't always mean it's a good thing. So the middle of last year, you've probably already heard, we've switched in terms of letting borrowers into, when borrowers apply to receive a HAMP modification prior to June 1st, 2010, they were able to state their income and verify it later. And what we found was that, and this was intended to provide immediate relief to those borrowers that were looking down at foreclosure. And after June 1st, they're required now the servicers are required to fully verify all borrower income before they can go into a trial. The second one is no dual track. So borrowers that are being evaluated for HAMP cannot be pushed to foreclosure or moved to foreclosure if they're being considered for a HAMP modification. That's as of June 1st. The third is borrower outreach. So getting the word out, soliciting all borrowers that are potentially eligible for HAMP and who have missed 2 or more payments. So servicers are now required to proactively rather than reactively solicit those borrowers. The fourth is the Dodd-Frank certification. And this is, as of September 21st, 2010, any borrower convicted within the last 10 years of a felony, such as larceny, theft, money laundering, tax evasion, is not eligible for any MHA program. So the borrower must sign up front a form saying that they haven't been convicted within the last 10 years. Has anyone seen that form? Yes. Okay, great. The fifth one, it's a federally declared disaster, and this is to provide immediate relief. So this came out after the Gulf oil spill. That was one of the things that would have fallen into this bucket for federally declared disasters. So in places where borrowers have been hard hit by that, they are getting a minimum of 3 months forbearance to provide some short-term relief for them so they can get back up on their feet and don't go down into the foreclosure track or short sale or deed in lieu. Our goal is to keep borrowers in their homes. It stabilizes communities. It saves taxpayers money, and for the borrower, they avoid the stigma of foreclosure. So we're doing everything we can to help borrowers in these situations. And then the last change is the borrower escalation. Now servicers are required to have written procedures and personnel in place to provide timely and appropriate responses to borrower inquiries and disputes that rise to the level of an escalated case. So that one is obviously important because we're starting to instill even greater discipline in the servicers to handle these cases. On HAFA. So the changes on HAFA. And again, I apologize to the folks in the back that may not be able to read this. If you can, kudos to you. But real estate commissions paid on short sale agreements will be the amount indicated in the listing agreement, provided that such commission does not exceed 6% of the contract sales price. Servicers must include a statement that any associated vendor fees will not be charged to the borrower or deducted from the real estate commission. I think before it was 5%, now it's 6%. A property a property that is vacant or rented for up to 12 months is eligible as long as the seller has not purchased another property in the interim. No minimum distance requirement. Servicers are required to obtain a third-party verification that the property was the borrower's primary residence at some point within the prior 12 months. So that was an important change because
Did we get a copy of that off the website or something?
yes, this information should be available on the makinghomeaffordable.gov website. I can also provide, I think I can provide the latest guidance maybe to Shelley, and she could get that over to all of you, if that would be helpful. The third point here, servicers are not required to verify a borrower's financial information or determine if the total monthly mortgage payment exceeds 31% of the borrower's monthly mortgage payment. Another key change. So the vacant property or the rental property, before you had to be residing in the property. Now that's no longer the case. The 31% DTI, debt to income, that's no longer the case. You're requiring verification there. Servicers are no longer limited by the 6% cap with respect to payments to second lien holders. That's important because I can't tell you how many questions I've gotten from folks that said, I can extinguish the first lien with the sale. The second lien, though, is greater than 6%, but it's not qualifying for HAFA. Well, before that was true, and they couldn't do anything about it. The borrower just wouldn't get the HAFA benefits. Servicer wouldn't get the HAFA benefits. Now that's no longer the case. Deed for lease agreements or agreements that provide an opportunity for the borrower to repurchase the property at a future time are now eligible for HAFA incentives. And the last one, servicers are not required to implement the new rules to any short sales retroactively. These are all effective February 1st, 2011. Changes effective June 1st, 2011. So this guidance just went out earlier this week. I think it was Tuesday that it was published. Mortgage servicers must evaluate homeowners for HAFA within 45 days after one of the eligible criteria is met. Within 10 business days following the receipt of a request for a short sale or deed in lieu, the servicer must send written confirmation to the borrower acknowledging the request. The acknowledgement must include a description of the servicer's evaluation process, timeline for decision, which must be no later than 45 calendar days from the date of the request. If it is longer, then every 15 days, the servicer needs to provide written updates to the borrower. So again, going back to that communication and timeline discipline. Servicers are allowed to approve sales by nonprofit organizations within the stated purpose that the property will be rented or resold to the borrower. So that's it on HAFA and HAMP. Lots of changes. I think this is sort of I think with both programs you're seeing the tweaks that I think are necessary to help provide even greater relief to borrowers across the country. Fannie Mae Home Path. Is everyone familiar with the Fannie Mae Home Path? Okay. Fannie Mae Home Path, the Fannie Mae properties, REO properties, another question that comes up is how do I become an approved agent? All I can tell you, go to www.homepath.com and it lays out exactly what that application process is. So there's a real estate professionals tab. You go to it and you see that you can become a Home Path listed agent through the application there. There's a link to it. If you want to sign up for service updates, you can do it right there. Home Path is a one-stop shop for Fannie Mae REO properties. So please go there if you're interested. And then here's some key resources. FannieMae.com, which is our general home site. Fannie Mae hotline, 1-800-7-FANNIE, For customer inquiries, I mean, it's a great tool there where folks are very responsive. Homepath.com. For REO properties, know your options. For borrowers or others that are looking for education on what's the options available to them given their scenarios. And then the loan lookup tool, which for the short sale assistance desk, I'd argue is probably your most critical link and key to increasing your revenue and getting more of that short sale market. So that is it.